Recently, the popular show that provides insight on the cryptocurrency industry known as Coin Bureau examined many potential tailwinds for cryptocurrencies in the year 2023. Although the host of Coin Bureau used the term bullish catalysts to refer to 10 different events, the following 3 are the ones that are most likely to take place. It is possible that the imminent launch of central bank digital currency (CBDC) pilot projects in a variety of nations would discourage wealthy individuals from investing in decentralized cryptocurrencies such as Bitcoin. The possibility that large IT companies like Meta would adopt cryptocurrencies, and more especially NFTs, is something that could be described as very bullish for smart contract platforms. The impending implementation of crypto rules in the United States and the European Union may encourage institutional investors to increase their holdings in cryptocurrencies. On Friday, December 9, 2022, Arthur Hayes, co-founder and former CEO of BitMEX, explained how he is making a dividend while waiting for the crypto bull market to resume. Hayes made his comments on the day. Hayes presented the following forecast for the values of cryptocurrencies in a blog post that was published on the 9th of December 2022. It's possible that $15,900 was the bottom of this cycle, but I can't be sure. On the other hand, I am certain that this was caused by a reduction in available credit, which led to an end of the practice of forced selling. I have no idea when or if the Federal Reserve in the United States will begin producing money again. On the other hand, I believe that the U.S. Treasury market will become dysfunctional sometime in 2023 as a direct result of the Federal Reserve's efforts to tighten monetary policy. At that point, I anticipate that the Fed will activate the bank's printers, and then boom shaka, laka, Bitcoin and all other risk assets will experience a price increase. Even though Hayes could earn a yield of almost 5% by investing in U.S. Treasury bills with durations shorter than 12 months, he is more interested in earning a yield that is significantly higher than that while he waits for the crypto bull market to return, which he is confident will occur because everything is cyclical. After that, he went on to discuss his approach to investing for the coming several months, which was as follows. Beta to Bitcoin, and to a lesser extent, Ether, is a requirement for my ideal cryptocurrency asset. These are the crypto assets that are held in reserve. This concept, known as crypto beta, states that the value of my asset should increase by at least the same amount if their value is increasing. This asset needs to generate revenue in order for me to be able to cash in on my token investment. This yield must be significantly higher than the 5% that I could receive by purchasing treasury bills with maturities of 6 or 12 months. My portfolio includes some extremely powerful assets, like as GMX and Lux, among other things. This is not the essay in which I will explain why I will be buying these during the following months of the hopefully sideways bear market and opportunistically selling my T-bills. But if you want to get a head start on finding the right asset to both participate in the upside and earn income while you wait for the return of the bull market, you should look at which protocols generate actual revenue on a website such as Token Terminal. This will get you started on the path towards finding the right asset. You are then responsible for conducting research into whether protocols offer intriguing tokenomics. It may be possible for some to generate a significant amount of revenue, but it will be extremely challenging for token holders to transfer their proportionate share of that wealth to their own wallets. A number of protocols provide a significant portion of their ongoing revenues directly to token holders. The most favorable aspect of some of these initiatives is the fact that everything related to DeFi was destroyed by the 2 downward waves of the crypto credit crunch that occurred in 2022. When investors were in a hurry to generate capital in order to repay loans, they rejected promising ventures along with the poor ones. As a direct consequence of this, many of these projects currently trade at a price-to-fees ratio that is truly bombed out. If I can make 5% by investing in treasuries, then I should at least earn 4 times that amount, which would be 20%, when I buy one of these tokens. If I want to maximize my return on investment, I should look for ventures that have a price-to funding ratio of 5 or less. The threshold percentage will be different for everyone else, but that is mine. I could buy Bitcoin or Ether, but neither of these cryptocurrencies provides me a sufficient dividend to justify the investment. Also, in the event that I do not receive a satisfactory income, I am keeping my fingers crossed that the price appreciation in terms of fiat currency would be phenomenal when the market turns. Despite the fact that I do believe that will happen, I would be overjoyed if there were low cost methods where I could acquire the return profile of Bitcoin and Ether in addition to yield from the actual consumption of the service. Investing in a market that you believe to be at its lowest point is fraught with danger. You are out there all by yourself, fighting the seductive allure of the traditional finance devil and his harpies with the message that Satoshi's good word should be shared. But do not be afraid, brave and honorable warrior, for the treasures of war will eventually be distributed to those who remain faithful. After a difficult year that saw Bitcoin's price drop by approximately 75% from its all-time high in November of the previous year, the majority of large banks and investment managers anticipate that the cryptocurrency market will pick up in 2023. The failure of the cryptocurrency exchange FTX, which is the most recent in a string of liquidity squeezes and bankruptcies that have unsettled investors, has brought into sharper focus the requirement for additional regulations in the highly speculative sector. The next stage of growth is anticipated to be driven by Ethereum and other projects that are centered on the functionality and utility of real-world applications. According to Matthew Siegel, the head of digital assets research at VanEck, Bitcoin may still test a potential low of $10,000 to $12,000, but it may recover to reach $30,000 in the second half of 2023. This prediction was made by Matthew Siegel. In November of 2021, the price of Bitcoin reached an all-time high of $69,000. So this is it for today's video. Make sure to like and subscribe to this channel for more updates and exciting news on crypto.